Millions of Brits are standing on the edge of a housing crisis that feels closer than ever. Across the country, families who once felt secure are now watching their rent climb, their mortgage payments double, and their savings disappear faster than they can replace them. What's unfolding is not a single problem, but a chain reaction of economic pressure hitting people from every direction. If you've ever wondered how an ordinary household can suddenly lose its home, or why so many are struggling at the same time, this breakdown exposes the 10 powerful forces reshaping the future of housing in the UK right now. Number 1. Soaring interest rates. The first major reason millions of Brits are at risk of losing their homes is the sharp rise in interest rates over the past 2 years. After a decade of historically low borrowing costs, the UK entered a new era where mortgage rates jumped from an average of 1.5% to 2% to 5% to 6%, and in some cases even higher. This sudden shift created a financial shock for households that had budgeted their lives around cheaper loans. Many families who once managed payments comfortably now see their monthly mortgage bills doubling, absorbing most of their income and leaving little room for other essentials. This single change has become a defining pressure point for both homeowners and landlords. The Bank of England raised rates repeatedly to control inflation, but these decisions carried heavy consequences. Millions of fixed-rate deals arranged between 2020 and 2022 are now ending, pushing borrowers into the current market where repayments are significantly heavier. People on variable-rate mortgages face even more volatility because their payments adjust instantly whenever lenders update their pricing. This has led to a surge in households entering mortgage arrears, a dangerous stage where missed payments can trigger repossession proceedings. Even landlords, who often operate on tight margins, are struggling to cover rising interest costs, pushing them to increase rents or exit the market entirely. For average families, the emotional and financial pressure is immense. Higher mortgage payments swallow income that was previously used for food, transport, childcare, or emergency savings. This forces people to make difficult choices, often sacrificing essential living standards just to keep their homes. Many households describe feeling trapped between rising rates and rising costs everywhere else, creating a cycle of stress that affects their stability. With more mortgage resets expected through 2025, soaring interest rates remain one of the strongest triggers behind the growing housing crisis across the UK. Number 2. End of fixed-rate mortgage deals. Another powerful reason millions of Brits could lose their homes is the mass expiration of fixed-rate mortgage deals that were taken during the ultra-low interest period of 2020 to 2022. During those years, many households secured mortgages at rates between 1% and 2%, believing they had long-term stability. Those deals are now ending, and borrowers are being pushed into a market where new rates have climbed to 5% to 6% or higher. This shift creates what economists call a payment shock, a sudden and dramatic rise in monthly costs that many families simply cannot absorb. The financial jump is often several £100s a month, which can destabilise even middle-income households that previously felt secure. This phenomenon is sometimes referred to as the 2025 mortgage reset, because a large portion of fixed deals are expiring within a short window. Lenders are reporting record numbers of customers asking for extensions, restructuring, or temporary relief because the new payments exceed their budgets. Some borrowers who locked into 2-year or 5-year deals during the pandemic are seeing their mortgage obligations nearly double overnight. Those on interest-only mortgages face even greater vulnerability, as rising rates make it harder to cover the interest portion alone. The rapid change has created anxiety across the country, with people fearing they may not be able to renew their mortgages at all if lenders tighten affordability criteria. For many families, this issue creates a domino effect. As mortgage payments rise, households must cut spending in areas like healthcare, food quality, transport, and children's needs. Savings disappear quickly, leaving people exposed to every financial hiccup. When fixed deals expire at scale, The country experiences a wave of borrowers slipping into arrears, and arrears often lead to repossession risk. The end of these fixed-rate deals has become a defining pressure point in the UK housing crisis, pushing millions closer to instability. Number 3. Record high rental prices. Record high rental prices across the UK have become one of the most alarming reasons many people risk losing their homes. Over the past 2 years, rents have surged at the fastest pace in modern history, with average monthly costs rising by hundreds of pounds in many cities. This rise is happening at a time when wages have barely moved, creating a widening gap between what people earn and what they must pay to stay housed. London, Manchester, Birmingham, Bristol and Glasgow have all seen rents reach levels that many working families can no longer manage. When a household is forced to spend half or more of its income on rent, it becomes extremely vulnerable to even small financial setbacks, making eviction far easier than before. A major driver of these rising rents comes from landlords facing their own financial pressures. As mortgage rates climb, landlords increase rents to cover their higher repayments. Energy efficiency rules, tax changes, and maintenance costs have also added pressure, pushing many property owners to raise prices or sell their properties entirely. When landlords sell, tenants are often asked to leave, even if they have never missed a payment. At the same time, demand for rental homes has reached record levels because fewer people can afford to buy, creating bidding wars that push rents even higher. These conditions combine to make renting far more unstable than in previous years. For tenants, the impact is deeply personal. Many report cutting back on food, heating, and basic needs just to keep up with rising rent. Families are forced to relocate far from their workplaces, disrupting children's education and breaking social support networks. The emotional toll is intense because renters know they have little control over these rising costs. As more people compete for fewer affordable homes, eviction risk increases dramatically. The surge in rental prices is now one of the strongest contributors to housing insecurity across the entire country.
Number 4. Cost of living crisis still not over. The ongoing cost of living crisis remains a major force, pushing millions of Brits closer to losing their homes. Even though inflation has eased from its peak, prices for essentials such as food, energy, transport, and council tax remain far higher than before. Many households entered 2024 and 2025 already drained from 2 years of financial strain, leaving little room to absorb further pressure. As daily expenses keep rising, the smallest increase in rent or mortgage payments becomes overwhelming. Families that once managed comfortably now find themselves making difficult choices between heating, groceries, and housing payments. This unending strain creates a fragile environment where any disruption can trigger a downward spiral. Energy bills continue to play a key role in this pressure. Although wholesale energy prices have fallen, the reductions have not fully passed on to consumers, leaving bills significantly above pre-crisis levels. At the same time, food inflation remains stubborn, hitting lower and middle-income households hardest. Transport costs, insurance premiums, and childcare expenses have also climbed, stretching budgets to breaking point. This creates a financial squeeze where people already living month to month face housing arrears the moment an unexpected cost appears. Without substantial savings to buffer these shocks, a growing number of families find themselves unable to keep up with rising obligations, pushing them closer to eviction or repossession. Beyond the numbers, the emotional impact of rising living costs is severe. People describe constant worry about unexpected bills, rising interest on credit cards, or letters from lenders. The stress affects sleep, relationships, and overall well-being, making it harder to manage finances effectively. When households are forced to prioritize survival needs over housing payments, arrears accumulate quickly. Many renters and homeowners are now reaching a point where their income cannot cover both basic life necessities and housing expenses. This persistent cost of living pressure remains one of the strongest drivers behind the growing risk of homelessness across the UK. Number 5. Falling landlord. Profitability and mass sell-off. A major factor increasing the risk of homelessness across the UK is the rapid decline in landlord profitability, which has triggered a mass sell-off of rental properties. Over the past 2 years, landlords have faced rising costs from multiple directions, including higher mortgage rates, increased maintenance expenses, and stricter tax rules. Many investment properties that once provided stable income now generate minimal returns or even losses. As a result, thousands of landlords have begun exiting the market completely. This wave of selling has left many tenants in vulnerable situations because when a property is sold, renters are often required to vacate, regardless of how long they have lived there or how reliable their payment history has been. The situation worsens when combined with the continued use of Section 21 notices, which allow landlords to evict tenants without providing a reason. Although the government has discussed reforms, the policy remains active, giving landlords an easy mechanism to clear properties before selling. At the same time, new energy efficiency regulations and upcoming environmental standards require costly upgrades that many landlords cannot afford. These pressures create a financial environment where selling becomes the only viable option. As more rental homes leave the market, supply tightens, competition rises, and tenants face limited choices. This scarcity pushes rents even higher, further straining those already struggling to stay afloat. For renters, this trend creates instability and fear. Families receiving notice to leave often have only a few weeks to find another home, and many discover that new rents are far beyond their budgets. Those who cannot secure alternative housing risk falling into temporary accommodation or facing homelessness. The psychological stress of unexpected eviction adds another layer of hardship, especially for parents, elderly tenants, and low-income households. The mass landlord exodus is reshaping the rental landscape in ways that directly increase displacement and housing insecurity for millions.
Number 6. Housing supply gap becoming critical. The UK's growing housing supply gap has become one of the strongest reasons millions of people face the risk of losing their homes. For more than a decade, the country has failed to build enough homes to meet population demand, and the shortfall has now reached severe levels. Government targets routinely fall short by tens of thousands of units each year, leaving families, young adults, and low-income renters competing for limited accommodation. As demand rises faster than new housing is built, prices climb across both the rental and buying markets. When fewer homes are available, even small increases in population or household formation create pressure that pushes vulnerable groups to the edge of losing their accommodation. This shortage has been worsened by delays in planning approvals, rising construction costs, and a lack of incentives for developers to build affordable housing. Many projects were paused during periods of high inflation because materials and labour became too expensive, causing further setbacks. Local councils also face budget constraints, reducing their ability to invest in social housing. At the same time, large numbers of existing homes are being removed from the market as landlords sell due to rising costs. These factors combine to deepen the supply gap, creating a situation where more people chase fewer homes every year. This imbalance leads to bidding wars, long waiting lists, and fierce competition for even basic rental properties. For ordinary families, this shortage translates into intense financial and emotional stress. People who lose their homes due to rising rent or eviction often find there are no affordable alternatives available. Many are forced to relocate far from work, school, or support networks, causing major disruptions to their lives. Others end up in overcrowded spaces or temporary accommodation because stable housing is out of reach. When supply fails to meet demand, even reliable tenants and hard-working homeowners can face instability. The widening housing supply gap has become a silent yet powerful driver of displacement across the UK. Number 7. Benefit freezes and reduced support. Another significant reason many Brits are at risk of losing their homes is the long-standing freeze on housing benefits and reductions in overall financial support. The local housing allowance, which is supposed to help renters pay their rent, has not kept pace with real market prices for several years. While rents across the UK have risen sharply, the support people receive has remained almost unchanged. This creates a widening gap between what tenants owe and what the system helps cover. Families that rely on universal credit or housing benefits are often left with large shortfalls they must somehow pay themselves, pushing many toward arrears and eviction threats. The mismatch between rising rents and frozen support has become a key pressure point for low-income renters. The situation becomes even more challenging for vulnerable groups such as single parents, disabled individuals, and elderly renters. These groups face additional living costs and often cannot increase their income to cover rising housing expenses. As the government tightens eligibility rules or delays updates to benefit rates, more people struggle to keep up with monthly payments. Councils also report increased pressure on emergency housing budgets because more households are falling into crisis. This means support systems designed to prevent homelessness are stretched thin, leading to longer waiting lists and reduced assistance. When benefits fail to reflect real living costs, even small rent increases can push people into dangerous financial territory. For many families, this gap creates a constant sense of insecurity. People describe feeling overwhelmed as they try to decide which bills to pay first, knowing that missing a rent payment can lead to eviction. The emotional stress is heavy because they understand that support systems no longer provide the safety net they once relied on. Without adequate financial assistance, households facing high rents have little protection against sudden income drops, job changes, or unexpected expenses. These frozen benefits leave thousands living one step away from homelessness, making reduced support a major driver of housing instability across the country.
Number 8. Rise in mortgage arrears and repossessions.
A growing concern across the UK is the sharp rise in mortgage arrears, which has become a major warning sign for the housing crisis. As interest rates increased and living costs stayed high, more households began struggling to keep up with monthly payments. Many families entered 2024 and 2025 with minimal savings after years of financial pressure, leaving them vulnerable to sudden changes in expenses. When even a small financial setback occurs, missed payments can follow quickly. Lenders have reported a steady rise in borrowers falling behind, and this trend shows no sign of slowing. Once arrears accumulate, the path to repossession becomes far more likely, putting thousands at immediate risk of losing their homes. The shift in lender behaviour has also contributed to the growing danger. During the pandemic, banks offered temporary relief measures such as payment holidays and flexible arrangements. Those protections have now ended, and lenders are returning to stricter policies. Affordability checks have tightened, making it harder for struggling borrowers to refinance or switch to more manageable deals. At the same time, repossession applications have started rising in courts, signalling that financial institutions are taking stronger action to recover losses. Borrowers who hoped interest rates would quickly fall are now facing prolonged pressure, with many finding that their incomes simply cannot keep up with rising mortgage demands. For affected homeowners, the emotional impact of falling into arrears is deeply overwhelming. Families describe constant worry about letters from lenders, calls about overdue payments, and the fear of losing their homes. This stress affects mental health, job performance, and family stability. Once arrears reach a certain point, options become limited, and repossession can move swiftly. The combination of financial strain and limited support systems has created a situation where thousands are unable to stop the process once it begins. As arrears continue to climb across the UK, the increase in repossessions remains one of the strongest indicators of a deepening housing crisis.
Number 9. New government regulations pressuring landlords.
Another major factor pushing millions of renters toward housing instability is the wave of new government regulations that has increased pressure on landlords across the UK. Over the past few years, tax reforms, compliance requirements, and upcoming environmental standards have made owning rental property far more costly. Landlords now face higher taxes on rental income, tighter rules on mortgage interest relief, and expanded safety regulations that require regular investment. These changes reduce profitability, especially for small landlords who operate on limited budgets. When combined with rising mortgage rates, many property owners find the financial environment difficult to sustain, leading to a growing number choosing to exit the market entirely. The introduction of stricter energy efficiency rules has added another heavy burden. Plans for higher energy performance certificate standards mean many rental properties require expensive upgrades in insulation, heating systems, and overall efficiency. While these improvements benefit tenants in the long term, they place immediate financial pressure on landlords. Some owners simply cannot afford the renovations, especially if they hold older properties. As a result, they decide to sell before regulations tighten further. This reduces the number of available rentals and increases the likelihood that tenants will be asked to leave when properties are listed for sale. The stress grows even more when landlords use existing eviction routes to clear homes quickly in preparation for selling. For renters, the impact of these regulations is significant. When landlords face rising costs or new obligations, the consequences often fall on tenants through higher rent or sudden eviction notices. Many families report being forced to relocate with little warning because their landlord is selling the property or raising rent beyond affordability. This pattern creates instability across the rental market, contributing to overcrowded waiting lists and fierce competition for homes. While regulations aim to improve long-term housing quality, their short-term effects have intensified insecurity for millions. These combined pressures make new government rules a major driver of the growing housing crisis. Number 10. Stagnant wages versus rapid inflation. A final major reason millions of Brits risk losing their homes is the long-term gap between stagnant wages and rapid inflation. For more than a decade, wages in the UK have grown far more slowly than the cost of daily life. Even when salaries increase on paper, they often fail to keep up with rising food prices, energy bills, transportation costs, insurance premiums, and housing payments. This creates a situation where households feel poorer each year despite working the same or even longer hours. As inflation surged between 2021 and 2023 and remained high into 2024 and 2025, millions of families found their income stretched thin. When basic living costs rise faster than earnings, any increase in rent or mortgage payments becomes extremely difficult to manage. This wage inflation gap also limits the ability of families to build savings or prepare for emergencies. When people use most of their income to cover essentials, financial resilience disappears. A sudden bill, car repair, or medical expense can push a household into arrears almost immediately. At the same time, rising interest rates have made borrowing more expensive, leaving families with fewer options for temporary relief. Credit card interest, personal loan rates, and overdraft fees have all increased, trapping people in cycles of debt that make housing stability even harder to maintain. As inflation continues to affect daily life, many workers feel they are falling behind no matter how hard they try. For renters and homeowners, this imbalance creates constant stress. People describe feeling stuck because their income never seems to match the rising demands placed on them. When wages fail to keep pace with inflation, housing costs become the heaviest burden, often consuming half or more of a household's earnings. This makes it difficult to stay on top of mortgage commitments or rent payments, increasing the likelihood of arrears. The slow growth in real wages has quietly weakened the financial foundation of millions of households, making the entire population more vulnerable to losing their homes. The crisis unfolding across the UK is not the result of one sudden event, but the accumulation of pressures that have built up year after year. Rising interest rates, soaring rents, stagnant wages, shrinking support systems, and a shrinking housing supply have merged into the perfect storm. For millions of renters and homeowners, housing has become a constant source of stress rather than stability. Families are making impossible choices, cutting essentials, moving away from their communities, or living with the fear that one unexpected bill could push them into arrears. These challenges reveal a deeper issue. The systems designed to protect people are no longer strong enough to keep up with the reality of today's economy. When housing becomes unaffordable for such a large portion of the population, the entire structure of daily life is at risk. Yet, understanding these forces is the first step toward protecting yourself and recognizing the warning signs before they escalate. Awareness gives people the power to prepare, adapt, and make informed decisions. The situation is serious, but knowledge helps people stay ahead instead of being caught off guard. If this video helped you understand what's happening, hit like, subscribe, and share this breakdown so more people can learn what's coming. Drop a comment below. Which of these reasons is affecting you or someone you know right now?